you logging into the audit committee?
Yes, we're live.
Morning, everyone. I'll call the audit committee meeting to order, starting with a roll call. Marcus Pryor here, Ellen Alexander, Alan Michaels, Diana Ostroff,
Here.
Danny Scaring, Susan Pitto.
Here.
All present. Has everyone had the opportunity to review the minutes from the March 20th, 2025 meeting? If so, I will entertain a motion to approve them.
Motion to accept. Second.
First from Susan, second from Diana. Any discussion? Hearing none, all in favor?
Aye.
Any opposition? Abstentions? Great, it's approved, excuse me. Next, I will turn it over to Kevin Testo for the audit engagement presentation. Kevin, good morning.
All right, good morning. Thanks, Marcus. Good to see everybody. I'm going to actually share my screen. And I can, everyone can see that? And I think you have it in front of you as well. So this could be really brief, but just as a reminder, we set these meetings so that as we engage for next year's audit for the year ending December 31st, 2025, this gives you the opportunity as an audit committee member to ask us any questions about what we do, when we do it, where we do it. We put that all in these slides, which I'll go through fairly quickly. But it's good practice. In fact, under the Nonprofit Revitalization Act, there's a requirement for an audit committee to meet with the auditors twice a year, once at the beginning of the audit and then at the end to hear the conclusions. So that being said, there's a lot going on in the nonprofit world. It shouldn't be any surprise, but given inflation, interest rates, uncertain economic conditions. Now, good news for ACBDC is that you're not technically relying on any type of government funds. You're already secured the Altech revolving loan fund. I think the biggest risk for your organization is the collection of the receivables. Your customers, per se, is really where the risk lies. So, when we're looking at the audit, we're performing a very large test of loans receivable. We're looking at the collection rates. We haven't done any work yet, but we do know that the loan receivable balance did grow from last year so far. We looked at the September 30th balance sheet. So that being said, as part of our audit, yes, we're testing the existence of the loan receivable, but we're also looking at collections to ensure that the allowance on those receivables is reasonably stated. And that would be something that I would urge board members to continue to monitor throughout the year. So that being said, some of the required communications to you is that yes, we are independent. We like to help with disclosures if there's any new ones, but ultimately the numbers and the footnotes are management's financial statements. Happy to say there are no new accounting standards that have to be adopted in 2025. If there were some, those would be communicated to you much in advance. As a reminder, what are we going to do? Our goal is to issue an opinion on the financial statements themselves. Our opinion talks about whether the financial statements are free from material misstatement and that they were prepared in accordance with generally accepted accounting principles. We don't look at every transaction, but we look at the transactions that are risky and material to your financial statements. We also, like in the past, will issue and perform what's called an examination procedure. This is really just looking at internal controls around investments. This is something that was required for a few years ago for public authorities. And essentially, it's just looking at, did you invest in anything new? Do you have guidelines and written procedures around your investment portfolio? So I don't anticipate any changes there. But again, that's just another opinion that we issue. And then, of course, the Form 990, the public information that goes to the IRS. We prepare that, and that's due initially May 15th of 2026. All right, this is kind of just a reminder, everything's based on risk. As I already mentioned, we don't look at everything. It's a risk-based audit approach. However, we are required to tell you what are the significant risks that we spend most of our time around. This is not specific to ACBDC. It doesn't mean that we know of a fraud or will cover a fraud, but we're ultimately looking at could revenue and assets be manipulated to make the financial statements look better. And as I already mentioned, those assets that we focus most on are the loan receivables. So we'll look at all new loans that came in, make sure that there's initial documentation, and ensure also that the revenue, the interest earned on the revenue or on the loans is properly stated. The team remains the same. Myself and Sam will be your main contacts. I ultimately will be the signer of the audit report. And this is when we're going to do it. So we anticipate performing some planning procedures in November and December. At this time, we look at interim loan portfolios and make our selections on what loans we're going to test, and we're going to confirm them. So management helps draft those confirmations. They get sent out, and to be honest, we've had great success getting all of them back. So in the January, February timeframe, that's when we'll perform our substantive procedures. At that time, that's when the final trial balance would be needed and then provided to us for audit so that we can come back at your March meeting to discuss the audit results. We would like to prepare the 990 at that time as well, so everything can get produced, reviewed, and filed. So everything is relevant information in a timely basis. So that's it. I think I covered the who, what, where, and when. Happy to answer any questions.
Doesn't seem there are any questions, Kevin.
All right, and that's fair.
Kevin, maybe you just want to go through the fee structure?
Yep, so the engagement letters have been provided. We have a fee for the audit and the 990 and the small examination. They are all, I can pull it up for you, Kevin. I will tell you, we did not make any increases. If anything, it was about $100 just to get us up to the minimum, but where we need to be for 990s as a firm. But we appreciate the relationship and we didn't want to drastically increase fees.
I think the fees come to $23,000.
Yeah.
Right.
Do we need we need to approve the engagement?
It's 21 plus 2, right? So that's 23.
Okay.
Unless I looked.
All right. Are there any other questions?
Oh, is there a separate fee for the 990?
It's 21,
There is.
21 and 2, I think, or
Yes.
something, right?
Yeah, it's
21
on
and
page,
21 and 2 for the examination.
right, it's on page 5 of their,
I saw that for the second engagement, which appears to be for the.
1,500 to 1,500 to 2,000.
So what's the total in?
24 to 25 total.
Any other questions?
That's it?
Okay, so it's my understanding that we need to approve the engagement, so I'll entertain a motion to that effect.
So moved.
First Diana, second Alan. Is there any discussion? Hearing none, all in favor?
Aye.
Any opposition? Or abstentions? Great, that's good.
All right.
Thank you,
Thanks, Kevin.
Thanks, Kevin.
Kevin.
Thank you, see you soon, bye-bye.
It's passed. If there's no other business, I'll entertain a motion to adjourn. Diana's like batting 1,000. And yeah, you're batting 1,000 too. Appreciate that. Man. All in favor? Any opposition to adjourning? Thank you very much, everyone.
Okay. Sign out and sign back in again? We have to sign